Let's go to the broader market and talk technicals. Joining us now is Craig Johnson, Piper Sandler Chief Market Technician. Craig, good morning.
Good morning. Thanks for having me on.
You know, Craig, I guess we're showing the chart here, the S&P 500, along with, what is that, the 200-day average, and we had the correction that culminated a few weeks ago. I guess big picture, if you don't want to overthink it, you say, well, it's an uptrend. It's been an uptrend. It didn't really violate anything on the downside. We've had a rotation of leadership, and maybe the market's broadened out. What's not to like with the Fed going to cut rates? Is there anything that you would bring up to say that we should be, I guess, overthinking it beyond that?
You know, Michael, as you look at this market, you don't want to overthink this market. But there is something we do need to take into consideration is the makeup of this market. We need to be thinking about large cap versus small cap versus mid cap in this market right now. And you come back and you look at what Nvidia did last night. Amazing results on the fundamental side. But Michael, as you know, stocks are made up of two things. You got your fundamentals and you got your technicals, two parts of it. And right now you come back and you look at a lot of these Mag 7 stocks, they're not making the same new highs like we've seen before. You can actually find some better looking stocks in this mid cap world that look a lot more constructive. And I think that's sort of the change that's happening. This is a market that's broadening out. It doesn't have to be led by just the Mag 7.
If it broadens out, and this has been, I think, something that so many have been pining for so long, it makes stock picking easier. People are not comfortable being hyper concentrated in a few names. But can the broader indexes manage to hold up if you do actually have that transfer? If I think back to the early 2000s when you had a similarly concentrated market that did broaden out, well, it broadened out in the context of the S&P 500 going down by almost half over the course of a couple of years, even as small caps outperformed.
I think you absolutely can see this happen. Again, I understand the math of the Mag 7, how large they are in terms of the market caps. But what if we just see these companies just sort of consolidate sideways? Why do they have to go down? I mean, they're great companies. They just need a break, take a breather, and then below the surface, we can find some of these things like Semtech and some of these other good-looking semiconductor companies pick up the performance that are making new highs right now.
And within, let's say, smaller stocks or just outside the Magnificent Seven, are we talking about defensive areas? You're talking about economically cyclical? Because there has been a little bit of a tone shift in the last few weeks.
You know, Michael, with the Fed looking to cut, which seems like a certainty at this point in time, we do know from going back in history that financials should definitely outperform. And if we go through and start looking at some of the regional banks, or you start looking at companies such as CBOE or ICE or some of these others, they all look pretty constructive. They all look like they're setting themselves up to take another leg higher. And that's part of the broadening process that we could see. So it can be those interest-sensitive names. It can be some of the mid-cap techs. And certainly we could also see some of the industrials with a, reshoring trade continuing to play out.